In the wake of last August's stock market flash crash, the New York Stock Exchange has been looking for ways to reduce extreme trading volatility. As part of that process, last week the exchange stopped accepting certain types of stock trades. In this week's U.S. Bank Economic 360, U.S. Bank Vice President and Senior Portfolio Manager Mike Denneman joins Business Courier publisher Jamie Smith in the newsroom to talk about what that means for investors. Mike and Jamie.
Thanks, Peg. Mike, thanks for being here.
Good morning.
As always, you bring new terms to my my list of words. I've been in flash mobs before,
right.
But tell me what a flash crash is.
Okay, so really maybe not too dissimilar. So, you know, what we're talking about here happened most recently last August. And in a nutshell, the market loses a substantial amount in a very short period of time, only to gain it right back in a very short period of time too. So we're all familiar with the idea of a market crash. It's the flash portion that's relatively new. So last August, it happened on a Monday morning. Asian markets had been down over the weekend, so when the U.S. market opened, stocks fell right off the bat, and they kept falling. The Dow lost about 1,000 points in about 5 minutes. Some individual stocks lost 20 or even 30% of their value in that same time period. So just very chaotic trading. But then it was over as soon as it started. Within a half an hour, the market had bounced back. So, you know, this is something obviously the exchanges would like to avoid. This is not a good situation for anybody. And so they've been looking for, what's sort of the root cause here and hoping to weed that out. And, you know, it's probably a combination of any number of things, program trading, computer-based trading. And so part of this ongoing process was, as Peg said, just last week they stopped accepting certain types of orders, namely stop-loss orders and good till cancel. The idea being that that was partly a contributor, and so by taking those out of the equation, that makes a difference.
Okay, so you threw some more terms at me. Stop-loss, and you said another one, good till canceled.
Sure.
What do they mean? Yeah,
so you're right. These aren't necessarily household terms, but they are, in fact, very commonplace trades, or I should say they were commonplace trades on the exchange. Had been around for decades and essentially allowed investors to place a trade today that may be impacted by some event in the future. So we'll just take stop loss quickly as an example. The idea is you own a stock, say it's trading at $10. You're afraid, what happens to my stock if the market goes down? So you pick a price at some point in the future where your rock bottom sell price, maybe $7. The idea is if the market drops and your stock falls to $7, that order kicks in, you sell that stock, then you don't have to worry about it falling further. You've stopped your loss.
Right.
So that would seem ideal for a flash crash. You have some protection, maybe a safety net, except it's something that works a little better in theory maybe than in practice. In fact, it didn't work well at all during the flash crash. And in fact, the exchange found that maybe it was doing more harm even than good. And so that's why last week they said, you know, no more.
So what does that mean to the investor, though? Now that they've stopped this, how's it impact them?
Well, it depends. For many investors who've never used these types of transactions, it's business as usual. Nothing changes. But many investors did use these, and probably the biggest differential will be the sort of autopilot nature of these trades. You could set up your entire portfolio with tentative trades that may kick in at some point in the future at various prices, and then you could leave it on autopilot. Maybe these trades kick in tomorrow, maybe it's next year. You know, you could go about your business, you could not watch the market every day wondering where things were going. Wow. But now that's been taken off the table. So if you were an investor who had a lot of these in place, sitting out there indefinitely waiting for some event or some price in the future, that's no longer possible. So it's going to be a new mindset in that regard.
Well, as always, it's great to have you in here and learn the secrets of the investment world. And we'll have you back in here again in a couple weeks. Can't wait.
Looking forward to it.
All right, great.